Hello, and welcome back to Camel Finance. I'm your boy Camel, and today we're going to be starting off with some good news for Bitcoin. We have got Australia's first Bitcoin ETF is due to be approved for next week on the 27th of April. So, of course, the big question is it a cash settled or is it a spot settled? And it is cash settled. It's going to be on the CBOE equities trading platform, and it will be trading on the Australian Stock Exchange. And there is so much demand for this by institutions that they are prepared to put up the 42% margin, which is required by the ASX, before they can begin to trade the Bitcoin ETF. A Bitcoin futures ETF is better than no ETF, I guess, although still not as good as a spot ETF. But no doubt we will see a spot ETF come in very soon. We've got another article just covering the same piece of news here. They're pointing at the 42% margin demand. But of course, in a 90 vol asset like Bitcoin, you're going to get margin called pretty quickly. So it's not surprising that they've got to put up a large chunk of margin to be able to trade this instrument. And lastly, for this piece of news, says the Bitcoin ETF has actually taken 2 years for them to sort out. So a long time coming. And I'm sure we'll be able to see more of these sort of products trading over the stock exchanges in the future. Okay, I want to take this in a slightly different direction now for today. I found this today. The World Bank plans 170 billion financing to ease multiple crises. Of course, they're blaming the usual, the usual things for their irresponsible monetary policy. But the reason I flag this, the reason I'm bringing this to your attention, is because, of course, this is more money. Where do they get this money from? Okay, you know where they get this money from. They're going to print it out of thin air, and of course they're going to cause more inflation. According to this, they are deeply concerned about developing countries. They don't want energy price increases and fertilizers and food to go up, and they know everyone is faced with a likelihood of interest rate increases, and this will hit everyone hard. Of course, this channel has been sounding the alarm for food and energy crises, so if you haven't seen the videos, go back and watch those. I'll put a card in the top right of the screen for that. Another recurring theme that you'll see on this channel is the IMF, the International Monetary Fund. They are, of course, expressing their concern about the build-up of private debt, at the same time as they're begging people not to adopt the Bitcoin standard. Again, if you've been watching the channel, you would have noticed these sorts of things already. And they go on to say that the World Bank and the IMF are concerned about the number of countries having problems with their creditors and slowing growth and rising global interest rates. And so what's the point I'm trying to make here? Well, the point I'm trying to make here is that, first of all, we can expect more inflation. Yep, we know that. What else? We had this tweet from Peter Schiff, March 14th, 2022, saying that the 10-year US Treasury yields are currently above 2.1%. Remember, this is back in the middle of March. And he was saying that if the Fed raises rates and forecasts more hikes, then yields could spike to 3% within a month, which is basically where we are today. So let's just quickly have a look at that. For the 10-year yield here, you can see we're at 2.88%. So we are basically at 3% within a month, just like he predicted. And so going back to this tweet, so the Fed has two choices. The Fed can do a dovish pivot here. It can ease up on its rate raises. Remember, we have been saying, again, for a couple of weeks now, that we're going to likely see a couple of token rate raises. But I'm trying to make the case here that we are possibly coming towards the end of these rate rises. And the reason for that is, if the Fed doesn't pivot soon, then yields are going to top 5% by the end of the year. And so the question he was sort of rhetorically asking is, how will the economy and the financial markets deal with this? Well, the truth is they won't deal with this. This will absolutely break the bond market. It will absolutely break the stock market. This is going to break everything. So this will corner the Fed into forcing them to have to print their way out of the crises, because this is all they can do. And so they're already sort of, in my view, they're already sort of planning and planting the seed in everyone's mind. Oh, yeah, we might have to deal with these crises, and we might have to print money out of thin air in order to do so. Meanwhile, the rates are basically exactly where you'd expect them to be within the time frame. And of course, if you've been watching this channel as well, you will know that gold is working on a breakout at the moment. And this begs a question. What does gold know? Okay, what does gold know? And when I say that, what does gold know? What do I mean? Well, when bond yields are spiking the way they are, why should gold be going up? Well, it shouldn't be going up. As bond rates increase, this should be putting enormous pressure on gold. Gold should be going the other way, but it isn't. And so it begs the question, what does gold know, right? Perhaps gold knows that if the bond yields keep rising to the point of undermining growth, the Fed will be forced to dust off the 1940s playbook and continue by resuming its asset purchases indefinitely. So if you've watched my previous videos, when you can see that I was calling BS on their threats to aggressively run off their balance sheet and their threats to aggressively start hiking rates, you'll notice that that all lined up with this local top for the stock market, which I seem to know about without looking at any news, remember. Again, go back and watch the videos. And what you'll see is that I was calling BS on all of this because there is no way they can just continue to run off their balance sheet, hike rates, and into a slowing economy with the bond yield spiking and inflation running the way that it is. Of course, with yields continuing to spike, but inflation outpacing the spiking bond yields, then we could end up with the real rates on these bonds remaining negative for a very long time. Again, I've covered this before, but you know, if a bond is paying 3% while you've got 7% inflation, you're guaranteed to lose 4% a year. What do you do when real rates remain structurally negative? Well, then it would make sense to take shelter from this inflation, not in bonds, which are guaranteed to lose money, but in hard currencies like gold and also maybe Bitcoin. And perhaps this is why we are seeing the relative strength from gold just in the face of the 10-year bond spiking the way it's spiking currently. You can end up with a double-edged sword with the bond market, because if these remain negative for a long time, investors are going to sell them off, which begs the question, who's going to buy them? Well, no one's going to buy them. The only people that are going to buy them is the Fed. The Fed is going to have to print money, it's going to have to put a bid underneath the bond market in order to do yield curve control and get these yields down, which of course will manifest as more inflation and thus be the catalyst for the Bitcoin and gold bull market throughout this decade. So with all that said, we've also got the drawdown in the long-term Treasury ETF, just surpassing that of the 2008-2009 financial crisis level, as you can see by this chart here. There is no bid underneath the bonds. There is only spiking yields and increasing pressure on the Fed to perform yield curve control. So in summary, I believe that we are getting close to a pivot from the Fed. I believe that whilst we may see a rate raise or two more, we are getting increasingly close to a dovish pivot. And that dovish pivot will indeed ignite the bull run of all bull runs for gold, for Bitcoin, possibly for stocks, although I believe any rally in the stock market will be short-lived, unlike that of gold and Bitcoin. If you found value here today, please go ahead and subscribe to the YouTube channel, follow us on Twitter, and until tomorrow, I'm your boy Camel. Take care.